the big thing to watch is this chart here. And this is something we talked about yesterday. We talked about the parallel that goes back to the COVID lows. So COVID lows, March of 2020 right there. Bear market lows of 2022. The correction in the markets in October, November of 2023. And lo and behold, look at what you have. The liberation sell-off right here, bottoming out all along that level. And essentially all I did here was I started with that trend line, extended it out right to the highs here from the bull market of 2021. And as we can see, we're right into that level. You could even argue yesterday we closed fractionally above that level. This area here is what I'm glued into. Now, there's an additional trend line we've been talking about for quite some time. This is the beautiful trend line that, again, goes a little bit more vertical in terms of its trend line upside. And you can see, again, going back to October, November 2023, to the low correction we saw in August of 2024, January of 2025, and then we hit it here and we pulled back. That's where we got that one decent move down in the market that we've seen in the last month or two before pushing to the upside into that level. And so really we could argue X marks the spot. The question is, when these next couple days end, so when we get through Wednesday, the Fed and earnings, and Thursday, this President Xi and President Trump meeting, do the markets still stay above that level? For a technician, this is unbelievably big. Where was M2 money supply at that same point? It was 4.85 trillion. Okay. So the idea here is 4.85 trillion this is exactly when the stock market topped in 2000. Now, what's interesting is current M2 money supply is 22.5 trillion. So we've seen a multiple of this to the upside from 4.85 trillion to 22.5 trillion. That is a multiple of 4.65 times. On Bitcoin, yesterday we were watching to see if we were going to reconfirm above this trend line. All right, so it broke down and then it confirmed, right? Here was your confirming candle, which was made it a legit breakdown. To recapture this line, you can see it got rejected here, came down. To recapture, we must reconfirm above. Yesterday, at one point, we were above. By the end of the day, nope, it did not confirm. Now, it still could confirm today, so we have to monitor this. But really, if you're going to get bullish on this, you got to see it confirm above this trend line. Once it confirms above, then it does open the door. It's only corrected about 12, 13% at this point. It's still so the way this works, notice how I have three supports, 1, 2, 3, and then finally my drawdown level. Each one of these has a percentage attached to it, which is how likely. Like this one to me was 90% chance that we were going to hit. All right, this one is probably 75% chance that we're going to hit it. As you get lower and gold gets more overdone to the downside, the odds of us hitting become less and less. Do you guys get that? So again, you're getting more and more, essentially oversold in a way. So this one's still very likely. This one's a little bit better than 50-50. Down here, this one is 50-50. All right. So this would be my golden buying opportunity on gold at this 34.85, but it's only a 50-50 chance that it hits. But you can use this, and this is how I trade, right? So, I've been short gold, and I'm still short gold in multiple ways. But as we get into these levels, I start taking some off the table, right? So again, here we've now achieved first target. That was the easy one. Now it's this one, which is still decently easy. We got pretty close to it. If we get through, then this one's going to be a little tougher to achieve. This is one that we have in our Dividend Trader service, which is part of Smart Money stocks and ETFs. And the reason why I love this, first of all, look at how beaten down this was. So if we just talk basic TA, right? UPS was trading at the COVID lows. Like, think about this. And by the way, remember in previous videos, yesterday I talked about KDP, which is Dr. Pepper, Keurig Dr. Pepper, right? I've talked to you guys about how a lot of these high dividend but not so sexy stocks are trading literally at multi-year lows. And these are the next big runners. Money, it doesn't leave the market, right? When things get pricey in certain areas, it rotates. That's what capital fund managers do, right? They rotate capital. They only take money out of the market when all out panic is out there, right? When the markets are absolutely collapsing. And right now, by the way, fund managers only have 3.8% in cash left. They've invested everything else. That number, by the way, is amongst the highest in history of capital allocation when they only have 3.8. So basically, the 3.8% in cash is amongst the lowest in history. So that's a pretty big shocking thing. But my point is that these dividend payers are the next runners. I'm not gutsy enough to go long Nvidia up here or any of these other ones. Like I can't go long CCJ up here. If anything, I'm looking day traded on the short side. But what I am looking at, UPS. Well, I was, right? Now, obviously, we're in it in the dividend trader and it's paying us out handsome. Pfizer, KDP was yesterday, but Pfizer, watch that next week when they report earnings. You know, these are the companies that, again, pay a big dividend, and they're the ones that are all trading at lows, and interest rates are going down, which is going to make dividend stocks even more attractive, right?